but I can say generally that it was a combination of high-tech investigative techniques and
what can I...
Thanks for watching this special edition of Street Signs live from the Federal Reserve in Washington. Now here's a look ahead at what's coming up on the closing bell with Tyler Matheson. Hi, Ty.
All right, Ron, thanks very much from my favorite town, my hometown. Unanimous decision to raise the federal funds rate. We will take a look at what that means for the markets and for the housing boom. And the Bulls and Bears are back. This time they butt heads, lock horns, claw one another over a video game maker. Maybe you own the stock, maybe you should. Maybe you should short it. We'll find out. As we head into the most important hour of the trading day, you can see the Dow. Up she went, down she went after the Fed. Now back up again by 35. NASDAQ by 12. Closing bell coming right up. The Fed has inflation fears, hiking rates a quarter point, and the markets react. Up mostly as the final and most important hour of the trading day begins.
Now on the closing bell, Mr. Greenspan's Fed says it's time to raise the rates, market reaction, and what it means to the housing boom. And can less be more? The urge to merge in the brokerage sector. Plus, does electronic arts got game? Two analysts go head-to-head. The final and most important hour of the trading day is underway as we count you down to the closing bell.
And welcome everyone once again to a busy hour, the closing bell. I'm Tyler Matheson.
I'm Maria Bartiromo. It is Fed Day and the markets have been volatile all day. Check out where we are right now as we approach the final stretch. The Dow Jones Industrial average up 26 points, just shy of the high of the afternoon. Had been negative pretty much the entire day and flatlined really ahead of the Fed announcement. Now at 10,277 on the Dow. Check the NASDAQ, which is also solidly positive thanks to the last hour of buying, up 11 points on NASDAQ. S&P 500 higher by about 2 points. Ty.
All right, the story of the day really is interest rates. Call it Fed up. Higher interest rates, the economy, inflation figuring into the stew. The Fed today boosting rates by a quarter point, acknowledging that energy costs have slowed the economy and inflation pressures have picked up. It says rate increases can continue at what it describes, here's that word, a measured pace. CNBC reporter Sharon Epperson standing by with the chief economist of Bear Stearns, John Riding. We'll get his thoughts on inflation in just a moment. Rick Santelli live at the Chicago Board of Trade with the reaction in the bond market. Rick?
Well, you know, Tyler, if you look at an intraday chart of the two-year note, it really precision, we do see that short maturity rates, those most closely tied to
several prominent home builder stocks.
The market just turned negative. You've got some weakness today in financials. AIG, Citigroup, GE down across the board. Pharmaceuticals are mixed. Merck is up, but the rest are down. And the Dow right now just turned negative, down about 34 points. NASDAQ holding on, but it is just barely positive. Leslie LaRoche is at the NASDAQ market site. But first, Melissa Lee at the New York Stock Exchange. Another turnaround, Melissa.
Yeah, Maria, exactly. And that's really because that statement out of the Fed had some very mixed messages in it, acknowledging a soft patch. Pressures on inflation remain a concern. There is evidence of pricing power. We are hitting right now session lows on the day, down by about 41 points. Keep in mind, though, keep this in perspective, because the trading range on the day has been just about under 100 points. So even though it seems like a big swing, the range has been very tight so far on the session. Take a look at your sector snapshot in terms of what groups have been making headway in the market today, what groups have been weak on the day. Strong autos, Daimler Chrysler as well as Ford coming in ahead of expectations for their April sales number. Also electronic components on the back of Emerson's results. Weak oil, of course, on the lower trade and crude, as well as building products on the Masco news, food retail, and the Safeway news. Take a look at the fourth biggest percent decliner on the big board today. Tyco, of course, the most actively traded issue. The crowd's still there. Had been as high as 40 traders around that post earlier today. It's now down to less than 10. But Tyco shares are losing on the session after the company took down its 2005 profit forecast because of higher commodity costs. That is something that we are increasingly hearing as the earnings parade continues. Let's head on over to the NASDAQ market site, check in with Leslie LaRoche.
Thank you very much, Melissa. Well, Melissa, we are seeing some very volatile action actually just in the last couple of minutes. This is the blown up version of the intraday chart of the NASDAQ. Here is where we got the Fed's decision. The initial reaction was to sell off because they talked about inflationary pressures in the market. And then basically the reading was, well, in fact, in that statement, there was no bad news and therein lies the good news. So that was the reason to buy the market. We are seeing another reconsideration of the Fed's statement right now in a volume, as we get a volume spike. Right now, with about 50 minutes left to go, we're at 1.5 billion in the market. Some of that buying had to do with the fact that the market, there's a very solid sentiment out there that the market had gotten oversold. Where do you want to call it? The last month, or the last couple of months, or the last 5 or 6 months, where the NASDAQ has done pretty much nothing but sell. In terms of the sector outlook today, biotechs have been holding in positive territory, as has software, although that is now coming off of its highs. Some of the rate-sensitive stocks that we look at here at the NASDAQ include Bankrate, which is online mortgages and loans, up 62 cents, accredited home lenders, e-loan, and such. Now, in terms of the top techs, I put this in a couple of minutes ago because top techs were, in fact, swinging higher. Now the picture is a bit more mixed as we have the NASDAQ come off of those session highs. We have a mixed picture in the top techs. Oracle is down by 2 cents. Dell, by the way, will report next week. So it's an interesting final hour of trading. Back to you. We're at 1929, pretty much where we opened the session.
All right. Thanks a lot, Leslie. For all of the up-to-the-minute market dispatches, including analysis and commentary, go to our website, cnbc.com on MSN. Ty.
All right, we're going to check on some stocks that are moving in this final hour of the trade.